Hi, friends. Welcome back to my YouTube channel. I am so excited. Today, I have the one and only Mike Stewart with us here on the YouTube channel. And Mike, I have to tell you, I appreciate you for so many reasons. You not only helped me get into my home, but you've helped my family, my sister, many of my clients, and you're just amazing. You're the lender guru in my mind. And I want to just say thank you for coming on and having conversations, guys. This is my preferred lender. I work with him regularly. I think I call him all kinds of times of the day. And I love him. He's the best. Mike, so tell us a little bit about yourself.
So I've been in the business since 2004, and obviously been through the ups and the downs, the mortgage crisis, and everything. And our specialty really is helping people that either have been told that they couldn't buy or just don't think they can buy. You can pretty much any lender can deal with somebody with a perfect credit score or a large down payment. Those people don't really need help, but the people that for whatever reason just don't think they can buy, that those are the people we really strive to help. That's typically probably 50% of our loan pipeline are those types of people. So that's our specialty, but obviously we can help people with perfect credit, as well. So yeah, that's kind of what we do.
Yeah, and I just want to tell everyone who's out there, one of my favorite things about you and your team is that you guys are so amazing. You guys actually talk to the people. You actually have conversations. I know I've had clients that you've talked to, um, and we're able to help them through making those payments to bring down their credit card, which would bring up their credit scores. It's not just like, oh, fill out this form, and if you have it, you're great. If you're not, then so too bad, so sad. You'll get a letter in 60 days. You guys are not those type of people, and that's so wonderful and very rare in today's world. Um, how long have you been doing this, Mike?
Since 2004, and to kind of respond to your last statement, um, yeah, we treat every customer we speak to like it's the last customer we're going to speak to. We only get paid when they close.
Yeah.
So, yeah, I'm not going to be trying to get people off the phone as quick as possible. We want to know everything about them. Their desires when it comes to the house, to the payments they're comfortable with. We want to know all their employment background, what kind of cash to close, are we dealing with? We need to get all the information so we can, get them into the perfect type of loan. So yeah, we definitely, we speak to people and find out as much information as we can.
Yeah, and honestly, I think I've told you this when I was even looking for a house. I was sent to like three different websites to fill out a form. And then 30 to 60 days later, I'd get a letter saying, oh, you've been, declined for this or that reason. And it wasn't until I talked to you and I actually talked to you, I got to actually speak to you. And you talked us through that whole process. And um I just every time someone's like, "Oh, well, who do you work with?" I'm like, "Oh my God, you've got to talk to Mike." Mike,
Appreciate that.
yes. Okay, so question. What got you into real estate?
Um, I had this is kind of funny. I had gotten fired from a concrete sales job. It was the only time I've ever been fired in my life. I was 31 years old, and I was scrambling on what am I going to do next. And I had a friend that had been in the mortgage business that had been trying to recruit me for years, and I kept telling him no, no, no. I had a marketing degree, so I thought going to the mortgage business would be like a step back, and
Mhm.
once I got fired, I had really no other choices to get to work right away, which I wanted to. And I mean, literally from day one, I was like, this is exactly what I was meant to sell. I love real estate. I didn't love concrete. I didn't love some of the industrial insulation that I sold, but I do love I do love real estate. So talking about real estate was like second nature to me. And
Hmm.
I'd already bought some houses, so I understood, the process. So yeah, it was a blessing that I got fired from that job.
Wow.
So that's how I got into it.
That's amazing. And okay, so question. For those who might not know, you are a mortgage broker.
Yes.
Okay. Could you explain what that process looks like? Not in the sense of how to become a broker, in the sense of like if someone were to come to you and say, I need a loan, what would that look like on your end?
As a consumer, I would, in almost every case, I would rather deal with a mortgage broker. And that's why I've always been a mortgage broker. I could have easily went and worked for a bank. But the reason I've never been interested is a bank is going to have their set of guidelines. Typically, they're a lot more restrictive. They're a lot harder to get people approved. And if any aspect of the borrower doesn't meet their guidelines, they're not approved. Which these lenders are really good for my business because, and these banks are very good because they turn people down a lot of times that we get approved. And so if I've got a certain customer that literally, if they called 10 banks, that all 10 would turn them down. I have the advantage. We have about 25 different investors. I only need one of those investors to say yes to the loan. Um, so we get a ton more loans approved than you would if you were going with a regular bank.
Yeah, that's so good. And then what kind of loans? I know that that was a conversation I've always wanted to have with you. What kind of loans? I know obviously FHA, but what are the other ones that you guys?
This is kind of a long list. Okay, so we have FHA loans. So I'll start with the government loans. Government loans are always going to have the best rates, best fees. Typically, our government loans have like no fees. So it's just a third party fees that people are paying, like appraisal, title work, setting up their escrow accounts, that type of thing. But on the government loans, you have FHA, which only requires a 3.5% down. We actually have FHA loans that we can finance 100% of the purchase price. You have conventional, where you can go as little as 3% down on a conventional loan, depending on your income limits. Conventional is a little bit more difficult to qualify for, but conventional sometimes is the preferred financing if the house isn't like move in ready. If it's not
Mhm.
move in ready, a lot of times people want conventional financing as the listing agent or sellers. We have USDA. USDA also goes 100%. Um, as far as non-government loans, we call these non-QM loans in the industry, but non-government loans, we have bank statement loans for business owners. These are really, really good loans. A lot of business owners end up writing off as much as they can on their taxes, and it can be
Yeah.
1099 employees too. So they go to their bank, and the bank tells them, you don't qualify, your income's too low.
Yeah.
So a business owner, a 1099 employee, will put them in bank statement loans where they only need uh, to qualify. We use their bank statements. We take a percentage of their deposits. So that's honestly an underutilized loan program, in my opinion. Enough people don't know about it.
Yeah.
Um, we can also do I-10 loans where we only need 3.5% down, where typically an I-10 borrower needs 20 to 25%. So it's drastically better.
Yeah. Yeah.
Interest rates are significantly better on these loans too, than your traditional I-10 loans. We have no document loans for investment properties and even primaries now. And no document loan, all they're doing is they're going off your credit score and the cash to close.
What's an
Uh,
example of that type of loan?
well, if it's an investment property and you wanted to buy, um, let's say a rental and it's $300,000, typically you're going to need at least 15% down, and they qualify you um, based on the property. So
Okay.
they look at the cash flow. So if the property, let's just make it easy for example's sake. If the payment's $1,000, they want to see that the house would rent for $1,000. That's how they're
Okay.
going to underwrite it. So they don't care um, to look at your W-2s. They don't care to look at your tax returns. They know it's a rental property, so they just want to see how it cash flows. On a primary residence, there's only one investor that's doing these, and we're with them. That's 20% down. They don't ask any questions how it cash flows, anything. It's just, do you have the 20% and is your score high enough? Typically, it's at least 660 that you need. And it's typically at least a 20% down on
Yeah.
the no doc primaries. We have loans where for foreign nationals, if they don't live here, we can get them loans. We also have asset based loans where if you have $500,000, you're looking to buy a $500,000 house. They don't ask to see tax returns or anything like that. So there's a lot of that's just
Just the tip of the
probably about
iceberg.
half of them. But
Are
so
those
that
like the ones that you most frequently then use?
yeah, and my job is when I get somebody on the phone is just see which program is going to be best for them. At first, I'll try and put them in a government loan. If that doesn't work, then we just keep going to the next best, the next best, the next best. But generally, if you have a good enough credit score and enough money, um, there's some type of loan for you.
Yeah, that sounds awesome. And then what's the most common then? Would you say it would be the federal?
The FHA loan, we do more of those than anything. FHA, uh, we only need a 3.5% down payment down to a 580 credit score. We do have down payment assistance starting at technically a 600. Sometimes it's easy to get 600s approved for down payment assistance. Um, Other times it's just, you may need to be a 640, 660. The underwriting wins kind of change with the government. Sometimes they're looser, sometimes they're tighter as far as approving people. But it's something we can find out quickly. So once I get the customer's information, I can run it through online underwriting, and we can have an answer to them within an hour or two if it's going to work.
And honestly, that's probably another thing that I absolutely love about you guys is that you as long as the person is prepared to give you the information, really you guys can have information to them pretty quickly, like the responses fairly quickly.
And it's not difficult information. I mean, really, everybody knows their social security number, everybody knows their date of birth, everybody knows their address. The most complicated questions I'm going to be asking is income and how much money do you have in the bank. If you work 40 hours a week and you make $20 an hour, that's super easy to calculate your income. Really, the only time it gets a little tricky is if you're a business owner, 1099 employee, if you're commission based. There's more variables with those types of jobs, so it may take more digging to get accurate income numbers.
Yeah.
But it's not a ton of information that we need to figure out if somebody can get approved.
What are some of the requirements that aside from that people should be prepared to present?
Really, what we're looking for is really mainly three things. We're looking at credit score. I mean, if you're a 500 score, it's going to be tough to get approved. if you're under a 580, you need at least 10% down. So if you know, I was on Credit Karma and they said my score is 512, and you don't have 10% down, you'll need to work on your credit. But we're looking at credit, debt to income, cash to close. Those are the three things. If your debt to income is in line, that you think that's a great place to start, to know that, okay, I can, this home ownership thing is a possibility. And if you do have some savings, it's not that complicated really to get approved. Just really those three things will make or break you.
Yeah. Okay. So one of the fees that I find that first time home buyers are always very thrown off by is like the appraisal fee. And it doesn't even matter how many times I go over it on the first time home buyers presentation that I do with them. It seems to always slip their mind at the end. Is there any specific fee that you feel like people should keep in mind when buying a house?
Yeah, it seems like appraisal fee a lot of times surprises people, that comes up, but it's probably the most important fee that they're going to pay, along with the inspection if they choose to get an inspection, because the appraisal is going to guarantee that they're not paying too much for the house.
Mm-hmm.
So that's the last thing you want to do, is pay too much, and that'll notify you. But the one thing that I always look at as a real estate investor and somebody who's been in the business for a long time is the taxes on a house. The taxes can make a real big difference in your payment, in your cash to close. Another thing is insurance. There's some areas where you have to pay flood, wind, and regular homeowners. So, if you really, really like a house, that's number one, but you also have to like the payment, and those taxes and insurance will definitely affect that. So when you're looking at houses, it's a really good idea to always try and see what those taxes are.
Yeah. Yeah, absolutely. One of the questions that I'm so excited that I'm going to get to ask you, because you not only own your home, but you also invest in rental properties throughout Galveston County. And so or even Harris, am I correct? Yeah. So one of my questions would be, why is it so important to buy real estate?
Well, in these inflationary times, what's driving inflation is the value of the dollar is decreasing. And there's some scary news out there that the value of the dollar could be rapidly decreasing. There's a lot of countries in the world that they don't want to transact in the dollar anymore, which could really send our inflation higher. So in that type of situation, that type of environment, we're lucky. We've had the world reserve currency since I think the 40s. So it hasn't really happened in our lifetime, but that doesn't mean it's not going to. In these types of environments, the only way to protect yourself is with hard assets. And one of the hardest assets is real estate. So when people's home values go up, a lot of times people don't really understand what's driving that. It's really the purchasing power of the dollar is dropping. That's why your home prices are going up. So if we do really run into a crash of the dollar's value, inflation really spikes, and if you don't own a home, you could definitely be hurt. If all your assets are tied up in cash or 401ks, that type of thing, you won't be near as well protected as if you bought a house.
Yeah. Yeah, absolutely. I'm so glad that you said that. I know that there's a lot of people on the fence, and people wondering why should they even. And I will say this: it is, buying a house definitely is a responsibility. You have to be prepared for it. You have to not necessarily be overly prepared, but you need to know that that's the direction that you're going in, and at least have some money in the bank so that you can pay for the fees and the closing costs and all of those things. But when I think about it, there's some people who, you know, may be in a limbo situation where they're planning to move away. They shouldn't be buying a house in that area right away. You know what I mean? It's more of a like, if they're in a limbo situation, then obviously they shouldn't be buying a house. But there's a lot of people who want to buy a house, but think that they don't qualify or are too scared to talk to somebody about that. And I think that with what you said, it really shines a light on your fear should not keep you from benefiting from what purchasing a home could do for you and your family.
Well, here's the thing you really should fear is if you're renting and you're not saving as much money as you'd like, you're putting yourself in a precarious situation because again, I think we've all seen the prices of rentals is consistently went up. If you buy a house, you can get a fixed rate. Your payment's not going to change. Your taxes and insurance could change. Insurance probably shouldn't really change much. Taxes could go up. But if you're renting, you can pretty much guarantee that your rent's going to consistently go up. And what it is today might be drastically different than what it is in 5 years. So I understand the fear. It's definitely something I experienced when I first bought a house. I was up every night for 30 days. But once you do it, you realize, wow, that really was kind of not as scary as I thought it was going to be. There's really no difference between paying a landlord and paying, Wells Fargo. I don't even want to use Wells Fargo for an example, but paying, I don't really like Wells Fargo, but paying your servicer. I
Yeah.
mean, you're typically your taxes and insurance are going to be wrapped into the payment. So it's really not much different than renting a house, except you own it now. And all the appreciation of value you're going to be receiving yourself. I mean, once you pay your mortgage payment, really the only other bills you're going to have, which are very similar to what you'd have as if you're renting a house, you're going to have to pay utilities. You may have to pay water. You may have to pay garbage. Some places you don't have to, but it's very similar, really, to renting, except now you have cost certainty,
Yeah.
and you're
I,
going to
I feel
reap
like,
the rewards when it appreciates.
yeah. And I feel like you also have more freedom. I had a client who we're currently working with, and he told me, he's like, I'm not allowed to have my dog who's over 50 pounds in my apartment. He's currently the dog is living with his parent because the apartment complex doesn't allow it, and he's still paying 1,800 a month. And so I was thinking about that. I was like, I could have any size dog I want in my house. It not only does it's very similar to renting, but you have a way more personal benefits, as a homeowner. And so, yes, completely. What is one piece of advice, Mike, that you would give a first-time home buyer who is thinking about buying a house?
That's a really good question. When I first got on the market myself, I was very, very price payment conscious. Um, and I passed up a deal on a house on a lake that I kicked myself to this day, um, that I could have afforded, and I didn't buy it. And it's astronomically worth more than what I could have bought it for. But you know, I would say do not try and get every last thing that you want in a house if it's going to, affect your way of life. If you can't vacation, if it's hard for you to go out to eat because you have this enormous mortgage payment hanging over your head. And sometimes we get people approved at numbers where I'm like, I would not want that payment if it was me. But most of the time, there's other income we're not counting. But what I'm trying to say is we could get you approved to a payment that is uncomfortable for you. I
Yeah.
wouldn't do that. But I wouldn't cheat myself in buying a house that maybe doesn't 100% meet my needs, or if you're telling them, hey, I understand this is a little bit more on what you want to spend, but this is a great buy because of this reason or that reason. If you're buying in a way better neighborhood, if you think in 5 years the value is going to be, much, much higher than this other house that has a cheaper payment, you've got to think about long term. You got to think about short term. You got to think about long term. So I would just weigh everything, um, and try and look at it as an investment, along with look at it as, where I'm going to be living
Yeah.
every day.
Kind of like the non-negotiables and the want to haves, kind
Yeah.
of like deciding what you have to have. I have to have 3 bedrooms because I have 4 kids, or I have to have two baths. But I want a pool if I can.
Yeah.
Kind of that. I think that is the wonderful advice.
There is something to be said for, if you really want a pool and it's going to make your life a lot better, well, then darn it, try and find someone with a pool.
Yeah. Yeah.
I mean, you're the one that has to live there. I kind of laugh that there was a customer who now works for me, Henry, who some of your customers might be dealing with. He was like 22 years old and he contacted me, and he was telling me about this house he was interested in. He wasn't in the business at the time, and it had a pool. And I told him, buy it, because he was a young, good looking guy. I'm like, buy that thing. You'll have so much fun with that pool, the pool parties. And he didn't buy it, and he regrets it. He said, I should have bought that house. I said, I told you, listen to the old man.
Wonderful.
Yeah.
Mike, thank you so much for being with me here today. And we are so excited to be honestly partnering with you. You're phenomenal. And your whole business is amazing. Your business model is amazing. And I'm so proud to be working with you just as an agent. I just want to throw that out there. But guys, if you guys are looking to buy a home and you're looking for a lender, give me a call. I'd love to get you connected with Mike. I'm also going to be putting his information down in the bio, and into the information down below, so you can get in contact with him as well. So thank you, Mike, for being here. And guys, please like, subscribe, hit all of the things that YouTube likes, and we'll see you next time.